Let's talk about trade gaps today. Lots of people have questions about that in reference to, what they are, the reason why we look for gaps back at a specific or key supply and demand zone, and why are they critical, why are they important. Let's talk about the gaps, all right? So first and foremost, I've been talking about as part of the strategy what I look for, and when I'm talking about high probability and low probability zones, and what piques my interest at a particular zone is if we have a gap at a supply demand zone. Okay, this is what how I say it really aids in a trade being more powerful, more impactful, working out more in your favor than not. Okay, low probability zones, yes, they can work. Tested zones, yes, they can work. Zones where they've been tested once, twice, maybe 3 times. People always ask that question there. Hey, Mike, once a zone is tested, is there any, a possibility that it might test it again and reject it? It can. But look, when we're trading, all right, we don't know until it gets back to that zone and we have to look for confirmation. And it may be just a setup just to entice you to want to get to a trade so that you become liquidity. So this is why I like to trade fresh zones or zones where there's a gap resting at the supply demand zone, because it makes sense. Because you have to understand from a business aspect who's driving the markets. We as retail traders don't. We don't have the capital to be able to do so. We want to be, if you want to perfect and become a great trader, learn the business aspect of trading, meaning who's driving it. The institutions. The sooner that you understand how they move and looking at their footprints and what they're doing on your charts, the charts don't lie. You ever heard the term or the saying that numbers don't lie? All right. The same thing kind of, just kind of using an analogy. You have to think in terms, and you don't want to become liquidity. And yes, it's hard not to become liquidity because you're not always going to be 100% perfect. But the key to trading is all about trade and risk management. I say this, I don't know how many times I've said this before, knowing soon enough when to get out of a trade. There's always going to be a million other trades you can take. Why are you trying to stay in something that you know is not going to work out? The moment you get that feeling in your gut, get out. Okay? All right, cut the trade. Even if you're up 1 or 2 ticks or whatever the case is, where it starts to come back against you, I've talked about in videos things or signs that I look for just in yesterday's video or the day before. I've talked about a few different ways to be able to get out of a trade quick enough. So one, you're preserving or protecting your capital. You have to know how to play this game smartly. You have to know what the institutions are really trying to do. You have to know market structure. You have to be able to read the charts the correct way so you can trade in the correct direction. Let's look at gaps and what they are. What do they mean, all right, to us as traders, retail traders within the markets? Let's take a look. Okay, so let's take a look at this supply setup right here. I marked with this box right here. I'm going to blow it up. I'm using my higher base chart, one that I mark zones off of, which is my 60 range chart. Now, if you're a first-time viewer and you don't trade range charts, maybe use time-based charts or whatever the case is, it's just fine, just as fine. But we want to identify areas, zones, to where the market has moved away from them and it's created a aggressive area of selling or buying. But at the zone where it doesn't tap back into the zone, meaning it pushes away from it and it doesn't retrace quickly back to the zone. All right. So if you look here, we're going to identify this zone right here where the market was pushing to the downside. What do you see here? I mean, you should be able by now, just by common sense and just heck, you can just have an educated guess to see what's going on here. The market's moving to the downside with lots of selling. But pay close attention when I'm talking about gaps. Look, the market runs lower right here. We get a break below this last bullish up candle here within this swing, okay, with this bearish candle here. If you pay close attention what took place here, the market ran lower and closed with this bearish candle to the downside below that bullish candle there. Did it immediately turn back around any portion of the next candle that formed and pull back to the bottom portion of that candle, meaning even including the wick of that bullish candle right there? No. So the way I like to mark the zones is, well, not mark the zone, but mark the gap at the zone. It's just, I mean, I don't mark this because I can see it with my eyes by now, but if you are training yourself to understand and become more experienced and gap creation in a sense, or being able to see or identify the gaps, lower portion of the bottom end of that bullish candle, and then the candle that broke it, did any portion of the next candle come back to it? All right, well, take a look right here. So we'll blow this up a little bit so you can see it. All right, so the bottom portion of that bullish candle, as I mentioned, okay, this is the candle that broke it. So then the bottom portion, or the bottom of the bearish candle here, you see it where it closed below it, the body of it right there. All right, so we're going to put a line right there. Okay, we're going to grab another line or arrow. But this candle here that we see right here, it has that top portion of its wick right there. So again, we're looking to see that any candle that closed below this candle here, that closed below that last bullish candle. I know it's kind of confusing, but as we move lower and took out that bullish candle to the downside within this supply area here, all right, did any portion of as the market was moving away pull back to fill in anything or any area back to the lower portion of that bullish candle? Okay, that's what we're classifying as the area of the gap. So the top end of this third candle right here, bearish candle here, is that wick right there. So we'll mark that area right here. So there's a small little gap in between right here, which means that this marks, or the zone for me, okay, I'm interested because it's a supply zone. We're breaking structure to the downside, and we have this gap back at the zone. All these means of confirmation add up for me for confluence, in a sense of just, letting me know that this is a higher probability zone. This what marks or makes a zone of a higher probability for me, okay, or higher, not say higher stakes, but higher probability for me. So I'll wait for it to get back there. At some point, it will come back there because the market has to fill in all these areas of imbalances or voids or gaps back to a zone. And because we have this small gap in between back at the zone, again, that makes that raises the interest for me and classifies this area as a higher probability area for a trade. Now, let's do away with this, and we're going to go over to that area to where the market eventually retraces back to the zone. Okay, let's kind of bring this together so we can see it. All right, so it pushes lower, and yeah, it takes some time for it to come back there. But when it gets there, look, it taps into the zone and fills the gap there back up to the upside, and it rejects it. Now, you have to understand too, I always talk about, man, you got to look at price action, okay? Understand, as the markets were tracing back to the zone, is there anything below us, like an area of support in which the market could, once it rejects the zone, can it come, or it could come down to it and possibly, bounce at? There's support right below. So if you got into this trade right here, you get into it. I'm not getting to my trades off of a higher base chart, guys. I mark my zones off a higher base, but then I move down to my lower base chart, which is my 12 range chart, and I look for rejection on that chart, and I take my trade on that chart. That's part of the strategy. I'm not going into detail and breaking the strategy down, because if you spend time watching the videos, you will see that I'm talking about the strategy over and over and over, so you grasp or get an understanding about the strategy. Today's video is about trade gaps, okay? How do we classify them? How do we mark them? Okay, how can we, classify them so we can see them? When we have a gap in the zone, it increases the probability back at that zone of something happening. Look, it comes here, rejects, comes all the way down here. So it came up here to 324, 18,324 on the NASDAQ, and came all the way down to say 18,288. All right, so that was a nice small little sell-off back to the downside right there, which you could have capitalized on and at least pull 10 points pretty easy off that trade right there, okay? If you know what you're doing and looking for the rejection off of the lower base chart. All right, so let's look at another zone, okay? We'll look at let's see here. We'll look at a demand zone, okay? We'll look at a demand zone. Okay, here's a demand zone. We just looked at this supply zone. The market runs to the downside, and we can see it's breaking structure over here below 161, runs to the downside. Okay, we reached some lows down here below. Must be some area probably of support off to the left side of the chart, or a demand zone. But either way, it starts to turn back around, making higher highs and higher lows. And it breaks this area structure here sitting at 164. That's why I have that blue arrow there. Now, there is a small area of demand resting right here off of the 60 range chart. Is there a gap? Take a look. I'm going to move this down something like I did above here. And you can see when the market pushed lower, created this area of demand right here to the upside. Did it immediately, well, once it broke above with this bullish candle here, this last down bearish candle, did it like push up and come right back immediately, like after breaking with one candle, come right back? No, it made one candle break and then it broke above again. So we got two bullish candles to the upside. So that's momentum. That's bullish momentum, buying opportunity to the upside. So this creates a demand zone right here. Now, is there a gap? Take a look. Let's use our arrow line again. We'll just simply go up. All right. In this case here, because we're breaking above a bearish candle, so we mark the back end of this bearish candle right here. Okay, and then that bullish candle that broke above it right here. The next candle that formed after the break, after the candle that broke the last bearish candle right here, the next candle that formed right here. Did any portion of it come immediately back down and fill the zone? No, it came as low as right here, as you can see. So we have this gap right here in between the area where the demand is resting at. So what does that mean? All right, what I logically in my mind, because I know the institutions are the ones that are driving the market. If they are pushing away from an area and they don't immediately come quickly right back to that area and there's a gap there, how I read that is in relation to order flow in a sense and transactions, what's going on there? The market is making, there's opportunity where orders are being filled to buy the market to the upside. If there's a gap there, that means that, okay, with lots of movement or force to the upside or volume to the upside, some orders or a lot of orders may not have gotten filled. So if there's a gap right there, and what that leads me to believe, okay, all right, that there must be orders resting on the table or on the books that need to get filled. So when the market comes back to this area, you can almost bet your bottom dollar that the market is going to reject and bounce from that area and move away from it, because there's still enough orders on the table there. They've got to fill their orders. They're trying to fill them as quick as possible. All right. So when the market gets back to this area and it reacts at the zone, and we see the confirmation on our lower base chart, which we're taking our trades from, which I do, then I can go long, and I'm looking to go long to clear the highs up here around 167. So this was a good solid demand zone where there was a gap at. Get into the routine. It's up to you if you choose to or not, of looking for these gaps at high probability or at demand and supply zones. That's what's going to raise the stakes of giving you more interest and allowing you to say, is this high probability or is this low probability? What's going on here? All right, so let's look at, just for example, another zone. So we see this was that demand zone we're just looking at. The market continues making, push to the upside, higher highs and higher lows, before it must have hit some area of resistance to the left-hand side of the chart. Right here, breaks lower. Now, it's breaking structure to the downside. All right? Demand zone here, supply zone here, supply zone here. Okay, you can see that. You can see what's going on there as it's breaking to the downside. Now, what does this mean to you? 1, 2, 3, 4, 5 bearish red candles. That's a momentum movement to the downside with lots of volume, which means that they are trying to fill orders. This is an institutional play right here to the downside. Understand that. And they're breaking structure. So if I see a break of structure, like I always talk about, I love to see break of structures where there's a nice zone being created from it or out of it, the supply area right here. So if this is a supply area right here, take a look. We're talking about trade gaps, right? Is there any means of a gap back at the zone? Well, let's take a look here. All right. Push down, pull back, break lower. This is that last bullish candle to the upside right here. Let's mark the bottom end of the zone, okay, of that bullish candle right here, the wick of it, okay. There we go. And the candle that broke below it was right here, okay. Now, did any portion of that third candle that broke after the candle that aided or took out that bullish candle right there, and that third candle there, how much of it, of any of that candle, came back to the upside and maybe filled back up to the zone? Did it leave any small gap there? Yes, it did. Very, very, very small gap right here. not a rectangle. Sorry about that. Let me grab a arrow line here. This candle right here, look what it does. The wick of it pulls back. It almost taps the bottom end of that bullish candle right there, but it didn't 100%, and it left a very small gap right there. Okay, so raises the interest of us looking for something to happen when the market comes back to the zone at this supply zone where aggressive selling took place. High probability, okay, because the gap is resting back at the zone. All right, so we got the pull back to the zone, and what takes place? Boom, plummets to the downside, pushes continuation to the downside to run the low there, right there at 128. So I showed you multiple, setups, 2 supply, 1 demand. You will see things like this occur on your charts. All right. Now, the question I always get is that, well, what if it's not high probability? Can the market, or will it, reject at a low probability area or zone where the market has tested that zone or pulls back to that zone? I'm not a musician. Okay. I don't know for sure. All right. Yeah, the market can test multiple zones multiple times and reject, but trading is about probability. Taking trades based on high probability. So many people, they kill me because they, one, suffer with means of psychology. They cannot grasp and understand that there is something on the inside of them that they're struggling with. And because they're struggling with that, they have a hard time being patient and waiting for a trade setup, a good quality trade setup, a good high probability trade setup where there's a trade gap back at a zone. Get into the mode of being more patient. The more you become patient, trust me when I say this, because people who are part of our Discord community, they have their biggest aha moments when they say, man, I got a strategy. I understand market structure, but they struggle with psychology. And they can't understand why other people or traders are being successful and profitable and consistent. And where they are, and the difference of where they are making mistakes of getting stopped out, not knowing when to get out of a trade quick enough, or how to get out of a trade quick enough, or what trades areas make more sense to take trades from. They're up one day making money or in profit, and then the next day lost it. And they keep scratching the surface trying to figure out what the problem is. The problem is you not waiting patiently. The problem is you not knowing how to practice proper risk management. It's not knowing where proper trade location or good trade locations rest on the charts. Start to put filters in place that allow you or help you take better trades. Okay? Stop spending so much time pointing fingers at individuals. All right? Regardless of wherever you may be, studying from or getting information from. This is the reason why I have, the information that I posted with all these videos. I'm putting it out there. I'm giving loads of tips and loads of advice because I want to see people become successful. The Discord community, if you're interested, it's free. Okay? How many other people out here do you know that are giving all this valuable information away for basically free without charging you thousands of dollars or hundreds of dollars for a trading course or mentorship, and lots of them don't even work out? I'm here to share my experience and the information and knowledge that I've been collecting and gathering and what's been working for me for years. It's up to you to choose which corner or which avenue you want to kind of educate yourself about, or not educate yourself about, but where you want to get the information from, where you want to learn from. Yeah, I'm on so much of this stuff out here on the internet, but I would rather for someone to kind of share with me, and if I can get it for free, hey, that's great. It's a plus, right? So I don't have anything to gain here. I'm not trying to gain anything. I want people to become successful. I want to see them become consistent and be profitable. Now, if you got something that's working for you already, I say this. The old saying is what? If it's not broke, then please don't try to fix it. Allow it to continue working for you. That's the beauty about, no matter what it is in life. All right. So kind of keep that in the back of your mind too. All right. There's nothing wrong with maybe learning a different strategy, whatever the case is, but I love to stick with what works for me. And I've been doing that for years. So I'm just sharing all the information and giving you the information away for free through these means of these videos. And you're probably saying, well, he creates so much video content. Yes, I create it because I want to see people. I'm pounding it. I'm pushing it out there because I truly want to see people become, better. Okay, I'm not saying become perfect, but become better in your trading. And it takes time. It really does. So anyways, the video was about trade gaps. And hopefully this has helped clarify that. It helped you understand, why gaps back at zones make sense. Okay. It helps you understand that these are higher probability trade locations as well. Just want to share it with you. But look, if you are a first-time viewer here in the channel and you haven't subscribed to the channel, please take the time by subbing by clicking on the subscribe button down below. And make sure to turn on all your post notifications so you never miss one of the uploads here. If you're interested in joining the Discord, all you have to do is scroll down to the lower portion of the video or in the description. You'll see a link that says join the Discord or become a Discord member. Click on it. It's free. Come over and join us. Okay. But outside of that, that's all I have. I hope everyone had a safe trading day. Hope you have a beautiful weekend, and I'll see you in the next video. But before I jump off of this video, would you do me the biggest favor and drop a like on the video? This helps the videos get into the algorithm, but it also helps reach the masses of people who are struggling that may find interest or may be looking for this video right here. Take care. I'll see you in the next one.